Hello, everybody.
Hey, boss man, we're here. We can hear you.
Awesome. Okay. So the stream is up. Welcome, everybody.
Hello.
Thank you all for joining. If you guys are hanging out in the Discord, if you wouldn't mind dropping into the YouTube channel to watch alongside, I will not be able to stream to both Discord and YouTube, so you can just mute me on the channel and I will speak to you here latency free. And if you wouldn't mind just dropping a like and send out a tweet that we are starting up this stream for everybody out there that would like to learn how to trade the market and get a little bit of guidance going through this volatility. Hell yeah. What's going on, everybody? Very sorry that we haven't done a stream in a hot minute. Been trying to stay on top of things, mainly just trying to help teach everybody in the Discord how to trade the SPY on leverage and with small accounts. So we've got some new content coming out to the channel very soon. You can look forward to seeing the first of many, many, many more day trading training videos to help you perform a little bit better on a small portfolio, trading the SPY and trading based on consistent market patterns. So that'll be coming out tonight after the market closes. But for right now, I wanted to hang out with everybody in order to help guide folks through this current market activity that we have in front of us because it's a little bit, shall we say, choppy, confusing, maybe even a little bit, dare I say, difficult. So, this entire time that we have been trading this market, I've been noticing a few, well, I had noticed several divergences, such as with HYG, that's junk bonds. A lot of junk bonds, or rather the junk bonds ETF here, was showing divergence from the SPY. And usually, the way I trade this is HYG acts as a leading indicator of what SPY is going to do. So you may not see it, but this big gap up actually preceded the move in the SPY by a full 24 hours, and HYG started indicating a big trend reversal. So it actually predicted the move in the SPY that we saw last week. So the gap up in HYG happened right around here, but you notice the SPY went up throughout the rest of that day. So HYG has been a really reliable indicator for us, and what we were seeing was a whole lot of conflicting signals from the SPY saying the SPY, HYG, dollar index, just everything, the treasury bonds, everything was signaling that the market was going to go up for a while until today. We had this big chop day, and we've just been doing literally nothing. So I drew some patterns, and I tried to figure out like what kind of signals are we going what kind of signals can we rely on? What divergences can we look for to figure out what direction the market is making? So, where are we going? We finally arrived at a final pattern right here. We were trading in this ascending wedge, which I was considering we might, trade to the top of this and then break through. But just today, it was pointed out to me by a member of the channel, Tempestuous Persephone, that we are trading in a diamond pattern. So this diamond top pattern is actually indicative that we are going to break down to the bottom of this moving average right here. The way that you calculate this, and let me go ahead and go back a little bit and clean up some of this because it's a lot of drawing. Gonna take that away. And I'm going to remove this wedge. We're going to pretend this wedge isn't here, and we're just going to trade this diamond top. And there will be a full tutorial video coming out to the channel tonight that will teach you how to identify diamond top patterns in more detail. But essentially, a diamond top pattern is when you have a big impulse move, and then you see this new top and a very large bottom And what you're noticing is that we've got lower lows here on this side, and we have higher lows here on this side. And we have only 2 touches at the top resistance here. Sometimes there will be a third touch on a diamond top pattern that is lower than this, and that will actually form a head and shoulders if you notice. But instead what we got was a breakdown below this level, and now we are testing the 100 period moving average on the 15-minute chart. Now that we've had this breakdown below, what we're anticipating is one of 2 possibilities. Either we get a slight bounce to retest this resistance and then get rejected and drop down, or we may just get up a little bit and then reject down very quickly. As I mentioned, we are trading as a part of this larger ascending wedge, which you can see that we have just broken here. So I know that this conflicts with my thesis from the past couple of days. The market started changing its mind, and this is why I'm doing this as a live stream, to let everybody know in real time that this is what's going on, that the market turns around on us. Sometimes we're wrong. I was able to get out of my long positions without too much of a loss. I actually had set a stop loss right below this area right here. So I got stopped out of my trade for a modest loss, and I have switched short on the market, and I'm looking to play it to the downside now. So the other thing that we can do with a diamond top is that we can measure the move. You notice this impulse move within the diamond. You can actually use this as a measuring tool to figure out a take profit. And what you do is you draw a line from the bottom candle of the lowest low of the diamond to the highest high of the diamond, drag it outside, and take it to the breakout level. So the top of your line should be right at the first candle that broke out. Let me delete some of this schmutz. Okay, so we had this breakout right here. So your measurement should show you taking profit at 365.85. That is a rough estimated area of where to expect to take profit. I am trading with some moving averages, so I have the smooth moving average here on the 15 and the 30 minute. I'd actually treat the 50 on the 1 hour with more respect than the 15 minute. I trade on the 15 minute, but I look at trends on the 1 hour. That's how I do my swing trades. But as you can see, the market is already making its decision to move to the downside. And if we break this next area, this is our last area of resistance, then this will be final confirmation for a move to the downside. So if we can get a close below this wick on this green candle, then we know that we're in for some additional downside. If instead we get a bounce here, then we're going to be in for a little bit of chop, and we'll have to wait a while before we complete the move. But so far we're getting additional volume today that's coming in late in the afternoon. The volume is moving up in an upward trajectory as the market's moving down. So this is actually helping confirm that we are going to make a bigger move in the market to the downside. So hopefully everybody gets is able to get a good idea of where to place their trades here. I'm going to mark this time for everybody at 12:05. So if anybody asks in the chat in the future what the SPY is going to do, we're just going to tell them, hey, go back to the first 5 minutes of this video, like right at the beginning, and we're going to go and you'll get all the information that you need to know about what the SPY is going to do. We're going to try and save everybody from a big market rug pull. the best that we can. But this is looking pretty bearish. We're starting to get some wicks, so maybe we'll get a little bit of drift to the side, but I'm thinking that we'll probably break this 100 moving average on the 15 pretty quickly. And we should see some additional downside today and probably a much bigger move tomorrow.
ATD.
Yeah, Num, what's up?
I don't want to interrupt, but what is going on with weed stocks? They all just blew.
Really?
Biden tweeted out about a pardon for marijuana offenses like 10 minutes ago.
All federal offenses or something like that. He's going to give all prior federal offenses for marijuana is going to be pardoned.
So everybody with So everybody with a federal offense who's currently serving time and the ones who are out are just going to be pardoned, like stricken from the record, all of it.
I don't know the details of it. That's as much of the tweet, as much of the news or the tweet that I read. I didn't look into it too much further than that.
Yeah, but look at like Tilray. Tilray just blew off the charts.
Wow, that's nuts. I've actually been bullish on Tilray. I definitely wasn't anticipating this move. Holy crap.
Yeah, sorry to interrupt the spy.
No, that's fine. That's worthy news. That's very worthy news. Okay, we're starting to get this bull hammer here on the chart for the 15-minute, so we'll keep a close eye on this, but I'm kind of expecting the market to test the top of this diamond, and then if we get a rejection here, then we're confirming the move, and that'll be an attempt, that'll be a decent re-entry if people are currently looking to get out of their SPY position. If you're currently long on the SPY and you're stuck in that position, this bull hammer might indicate a reversal at least to this previous resistance, and then you can get out there for a little bit better of a exit and then switch short there. But don't wait too long. If you cross below this wick, then you need to get out of your position quickly. Honestly, any candle close below the moving average here is probably a sign that you need to exit fast. So just be ready to make a decision if you're on the fence about what to do. Looks like we are going to get a little bit of a bounce here, though. So hopefully folks will be able to at least make a decent exit. All right. So AMC jumped as well. Let's go over some of the other tickers that we've got here. Okay. Clean up some of this chart a little bit. Okay. So we've got a few other tickers to pay attention to. Apple is looking like it's beginning to top out. This consolidation's been going on for a little while and the volume is dropping out. I'm wondering if that's an indication that each of these are about ready to start taking a nosedive. Nvidia is already heading down. Tesla still looking fairly weak, but we do have a rising low. Looking very bear flaggy. Very bear flaggy on Tesla. Tesla got rugged hard. That news that they were going to be forced to buy Twitter really threw a wrench in Elon's gears. Rough day, man. Rough day. Hey, Shane, I see you calling out KPRX. I 800% short interest is a bit extreme. I would check to see if they had a recent reverse split or some kind of an offering made recently. That would probably indicate that the short interest is much smaller versus its float. If they had any action that would cause their float to grow or shrink by a significant margin, that's probably why that happened. KPRX is Biore Pharmaceuticals. Let me look at it on the daily. Yeah, they had a split, so that's probably the reason why. Yeah, a 140 split, that would easily explain why the short interest is so extreme. If they were at, like, say, 10, 20% short interest of their free float and they reverse split, then the data is lagging, and there's probably not yet been a mathematical correction to the Ortex data if you're looking at that. But it looks like their float shrank significantly, and now they're trading at $8.63. So that's a pretty brutal reverse split. I wouldn't trade this. This is getting hammered pretty hard. I learned my lesson with Excella. After a reverse split, it's time to stay out or maybe even go short. Rarely does a reverse split do anything good for a stock, and I won't trade those until I see some fundamental benefit to it. Right now, their earnings and income are showing some serious losses. The technicals technically look good, but financially speaking, with their earnings going down and having just done a reverse split to maintain compliance, I would stay away. That's just my thinking. Y'all can do what you want. There are some technical patterns like bullish divergence and a double bottom here that I see at the bottom of its chart that could indicate a reversal is underway, but I wouldn't trade that without confirmation, and a reverse split is bad news bears for me, so I'm not going to trade that. Let's go catch up with some of the meme tickers. We got AMC, which is still trading its ascending lows. We've still got this in front of us here. Seems like AMC is still finding a bottom. It really doesn't like being below $8. We got earnings coming up here in another month. So November the 7th is where their earnings are scheduled to be at. We have tested and broken this regression channel that you see here and then traded back inside of it for the last couple of months. So AMC is definitely looking a little bit more attractive at these levels. A better price for sure. The APE dilution announcement certainly hurt things a lot more. The one thing that I do see that is somewhat a benefit to AMC, AMC, is that APE can save the company financially by diluting APE shares and getting more of their debt wiped off their balance sheet. But what I'm noticing right here is that we have a lower low in the price and we have a higher low on the RSI. This is bearish divergence. Or I'm sorry, bullish divergence. God, I'm saying literally opposites today. So this could be an interesting signal of a reversal, but it needs to accompany rising volume. So without that rising volume and an increase in price, there is no trade. So wait on that and let that percolate. See how APE and AMC do over the next couple of weeks. I like to keep an eye out on AMC plus APE and actually look for the tickers combined. You can do this in TradingView by doing AMC plus sign APE. You can combine any ticker and you can actually trade these. But I see that bullish divergence here as well. You see this higher low here on the RSI with a lower low in the price. And now you're getting the price reversal. This is more of a confirmation move. This indicates bullishness. So I'm still going to wait on that. I'm not going to add to those positions just yet. But if I'm going to buy anything, it would be AMC, not APE, because I know that APE is going to be diluted. And I'm not keen to just throw my money away anymore. I'm kind of getting tired of that. Let's catch up with BBIG. I know that there's got to be some in the crowd who are excited about BBIG. Let me hear it. Let's see. What happens if Biore does a reverse split? It's probably going to reduce its float and send its price going a little bit further down. But Biore doesn't really concern me so much. It will drop the price, but I don't want to sacrifice shares. That's a personal decision. That does not mean that you should do what I'm doing. You should do what's right for you financially, but I'm going to hold my Biore position and stay long in the company because this is a 5 to 10 year hold for me. That is an investment. I don't care what the price does for the next several years. As long as the company is still financially stable, which it is, they have investors, they have capital, they have cash runway for several years. They have the money they need to survive. They've got good patents, they've got good data, and they've got a marketing team ready to sell their product. I'm happy with that. BBIG is looking really nice, actually. We finally had a clear breakout of the descending wedge on the daily chart. I've been trading BBIG, just kind of looking for opportunities to accumulate, and this descending wedge is looking very nice. We finally hit a floor here where we consolidated at a flat level, and this has formed a triple bottom. I've called this out a few times now. BBIG is finally starting to wick up through this last area of descending resistance, which is following the top wicks of all of the big impulse moves that BBIG made in the past since September of last year. And now we are starting to wick through it. We are forming a tombstone candle at the moment, that is a bearish candle, but I kind of anticipated that BBIG would need to touch this level before it can make another move. So we have to retest this wedge and see that we still have support above these lows. If we maintain a level above 95 cents, then I think that BBIG will finally reverse and we'll start to see some return to former highs. Okay. Let me know what other tickers you guys want to take a look at. I have to say that Matt Kors was right about APE, honestly. I do think that it would have been great if AMC could save itself with APE shares, but he was right in saying that APE being diluted was going to lose money. And I knew that going into it, but I was banking on more of retail to hold their positions, and this would cause a liquidity crisis. Because when those APE shares were initially issued out into the market, there's a limited supply of them, and the brokers needed to issue those on a 0-day settlement, so T0. And because of that, I was operating under the pretense that there would be a lack of shares available due to the high number of failures to deliver in AMC. And we did get a huge number of failures to deliver in APE. That did happen, but it wasn't enough to send the price skyrocketing quite like we thought. APE did perform for the short term, but ultimately it lost support and there were far more sellers than buyers. And I held it up till now, but I'm really not interested in buying anymore. And I'm just going to sell covered calls and wait for a time to exit. There's no point in holding APE for me at this point. The price has already dropped down, and AMC's already announced its dilution intentions, and they're going to start selling those devices already. So if AMC gets the money that they need to survive, that's fantastic. The AMC shares will do great. That'll be fine. I'll be totally fine with that. Hey, Mr. Boulay is taking a little bit of a hiatus. He's okay, but he is taking care of some stuff at home. We're wishing him well. He's had some things that he's had to take care of at the house, but he will be back. Is the meme market at a relative bottom? That's a big question, and I really don't have the answer to it. A lot of these stocks have been beaten down because they're small cap. They're very easy to target, and a lot of them are involved in the Russell 2000, the Russell 3000, and so on. And I honestly can't say, but I don't think that this is the bottom for the meme market. No, I think it can go lower. I know that that's not the exciting thing that everybody was hoping that I would say, and I'm sorry, but the technicals say that the market is still going to the market's going to continue to punish retailers that are pouring money into memes. And my goal is not to rain on people's parade. My goal is to help teach people how to profit from larger market moves and profit from the SPY, because you can profit on the SPY on the way down, and you can use that in order to invest in whatever you want. Like if you want to invest in AMC or GameStop or BBIG or whatever, you know, you can invest it in LMNOP for all I care. That's all good. But for the time being, the market, we are in a bear market. You do not want to pour your money long into small cap stocks. They're the first thing that get smashed. It's just the way it goes. Bear markets are brutal. They don't care. So although the thesis of buy and hold does work out over the long term, it's going to hurt for a while. So what happened to seasonality? We still do have a seasonal rally ahead of us, but right now there's a lot of news that's going around in the market. Like for instance, we have big chaos going over in the UK. The central banks in the UK are begging all EU central banks, all the European countries, and the United States central bank to pivot. And our central bank, the Federal Reserve, has flatly said, no, we're not pivoting. We are going to keep raising interest rates until we get inflation under control. No mercy. And that is bad for the market. So that's a bad sign. So if you look at the SPY, it's not responding well to it. Now we're starting to print a bear flag on the 5-minute chart. As you can see here, we have this big impulse move to the downside here. Well, it's not really an impulse move. It was more like a slow grind, I got to be honest with you. I was waiting for this breakdown. This breakdown candle right here is what finally convinced me that it was time to go short again. But yes, this is the current trend. This is your exit, by the way. If you're long in the market and you want to get out of a long position and switch short, this is your opportunity to get an exit. Not financial advice. You have to do what's right for you. Do what you think. Think independently. Don't just listen to me. Just watch the technicals, read the technicals, and really think about it. Don't just blindly trust the word of a YouTuber. I don't care who it is. But right now, based on what I'm seeing, we had a drop down below this huge diamond top. We've got a big diamond top here. And we've gotten a confirmation breakout with this big candle. And there was a surge of volume that indicated that this was the correct move. And now we're printing a bear flag as we're exiting. So this retest of the diamond, a retest to re-enter this diamond, was expected. If we fail to re-enter it, then we are going down. And it's going to break down through this bear flag, and we're going to keep moving to the downside. That is the expected move. If we do re-enter the diamond pattern, then we're going to have to retest it one more time, retest these levels, and then move to the downside. So it could be early, but right now I'm working with the technicals that are in front of me. I'm trading the chart that's in front of me, and I'm paying attention to all the signs. There's also a MACD crossover here that I'm paying attention to. And I do see RSI bullish divergence because there's a lower low in the price. There's a lower low right here. And there's a higher low on the RSI. So I'm paying attention to all of these things, looking for any sign that I might be wrong. So far, we're getting a red candle that's printing after these 3 green ones, or 2 green ones. And that's what I'm watching for. Do I still avoid Mullen? Yes, I do. I am still avoiding Mullen. I do not like the way that the CEO has operated. He's not been transparent, and he has been involved with a known bad actor in the market. and I'm not going to buy his stock. I'm not going to buy stock in his company. That's a personal decision. You can do what you want, and I won't knock anybody for trading Mullen or whatever. But my personal decision is to stay away from it. Hey, Snookeroo. Good afternoon. I really appreciate that, dude. I'm doing my best. Doing my best. Taking a bit of a risky gap down bet on Apple. Let's go take a look. What is Apple doing? Interesting. Okay, so I see this harmonic that wanted to print in front of me. What does this say? Okay. So this is a classic cipher pattern. It's pretty common. We're printing lower lows overall. The RSI has been moving down. So far, there's no divergence to indicate that the market is supporting Apple right now. And broadly speaking, I've been expecting Apple to move back down after a brief rally. And to be honest with you, this looks like the rally I was expecting for Apple. This is kind of what I was waiting for. And now that I'm looking at it a little bit closer, I think I see a diamond top in Apple also. So we should see what it does. But if Apple does this breakdown again, then I think that we're going to head back to the bottom of this channel. We actually have a diamond within a diamond. We got this big impulse move right here, and then we have a bottom, top, bottom, top, bottom. It's big consolidation right here. These kinds of structures are fairly interesting. They don't show up all the time in the market, but they've been showing up more frequently lately. Weed stocks going nuts. Yeah, we noticed. I saw that Tilray and the others were going pretty crazy. Do I plan on streaming on Rumble? I haven't really thought about it, honestly. YouTube is easy enough. I wasn't really looking to make a huge career out of YouTube. And this is a pretty fairly easy platform, but I'll look at Rumble and consider it. I hear a lot of people talking about using Rumble instead. I know that they pay people a little better and they're not as stringent with their rules around what's considered acceptable content. Not that I think that I'm pushing those yet. I haven't even. The worst thing that's happened to me is getting a copyright strike for copyright-free music, which was a mistake. So. Already got puts in Apple and they're doing okay, but added to it. All right, good luck, Boomer Assassins. Much love. Good luck, homie. Let me catch up with the stream, the Discord here. Oh boy, BBIG, Daily Mail journalist who wrote the Sequoia TikTok story is asking for info about the Susquehanna story with BBIG. Quote from Wall Street Custodian. Interesting. That would be pretty wild. That would be extremely wild. I would love it. I would love to see that. Okay, I need to fix this. Let me get rid of my extended hours. Okay. I think Apple's probably going to need some time. If you're playing some short-term contracts, like for this move to retest this support, then that could be good. But if you're going long-term, I think that there might be time for better entry a little later. It depends on what you're interested in doing, though. I do see this cross down on the 1 hour, though. That looks attractive. The RSI is pretty much following my expectations on Apple almost exactly. I was expecting a stronger bounce off of this resistance, but it actually was pretty weak, so maybe it will take a shot to the downside quicker than I thought. We'll look for some opportunities to short Apple here very soon. I've been watching this channel carefully, and I don't know if anybody else has noticed, but this diamond top is looking really similar to the one that the SPY had drawn back in June, right before it had that big drop. I was calling it out in the video that I just recorded today, but I'll point it out again. This diamond top right here, you can see that's the diamond top right here. We had a big impulse move, and it had this, it had rising highs, then lowering highs, and lowering lows, then rising lows. And when it finally broke the diamond pattern, we had multiple gap down days in a row, and we hit the low on the market all the way down at like 362 on the SPY. It was crazy. That was a crazy day in the market. My goodness, this chart is dirty. I really need to clean some of this up. I very quickly lose track of what I was doing when my chart gets this ridiculous. Okay, got a couple of take profit lines down there. And I have my latest supports and resistances up to date, so that should be fine. I'm going to go ahead and get rid of some of these. You know what I'm noticing? I'm beginning to notice we had this big move to the downside, right? And then we chopped in this area. Well, notice how we undercut this low and we tested it multiple times before we reversed back to the upside. Well, now we just had the same move, except now we're bouncing off the resistance. We had this big impulse move down here, and now we're bouncing off the top. I'm going to watch this really carefully, but I think that this might actually be a signal that the market's coming down harder than I expected. I think that somebody was asking a question about seasonality that I didn't fully answer. Can Netflix unfollow the SPY? Any one stock can do whatever it wants, honestly. I say whatever it wants like it's sentient, but stocks will inverse their ETFs occasionally, but it depends on the sector. A good example is if you look in the SPY, everything is red today, but the one thing that's green is energy sector. And if you go to Exxon's chart, it's ripping right now. I actually called it at the bottom and forgot to take a bet. It was at like $85, and I'm like, I'm betting on Exxon going past 100 in the next couple of months. And I was right, but I forgot to take my bet. I've been kicking myself all week because I didn't take that. I feel like a dumbass. But I've missed my entry at this point, so I don't want to go back into it. I'm just going to have to get over it, I guess. It's just one of those things. Anyway, as for seasonality, I do believe in seasonality. I do think that it's rather consistent, but the problem is that we have so many we have so many bad news prints coming out back to back to back, and the Fed is not pivoting. Seasonally, we go through this because it's an election season, and you'll see the market pump in October and then have a big fearful drop right in the second half of October. And they call October the bear killer because seasonally October is a very high performing month that comes right after September, which is a seasonally poor month. But if we have the opposite occurrence, like some of the worst market crashes occur in October. Like we had the crash of Wall Street on Black Monday, 1920, or I'm sorry, Black Monday in 1987. That was in October. The crash of 1929 that led to the Great Depression, that was in October. I'm trying to think what else. 2008, the big crash that led us into the Great Financial Crisis, that one happened in October. It was preceded by a large bear market that started in September. Well, it started that summer, but really got bad in September. And then finally in October, it just fell off a cliff. So seasonality does have its place, and I've been trusting it. It's been really consistent lately, but I'm trying to trade the chart that's in front of me, and unless I see more convincing data that shows that the SPY is going to keep going, I'm just going to trade what's in front of me. Update on the SPY, we're getting a what looks to be a crossover that's pending on the MACD on the 5-minute. The 15-minute, we're starting to print a cross up, but if it rejects here, then we could see the SPY make a huge drop here at the end of the day. We're in the last 15 minutes of the market, so things are about to get real interesting real fast. We'll see how it goes. Continuous degen bets on UVixie and the Qs and SPY, of course. I hear you, homie. Just a reminder, guys, if you're liking the stream, please leave a like, and let's get the like count up here. It really helps out the YouTube algorithm and gets more people in here so that we can help save other people's portfolios. I'm trying to teach people how to play the bear market to their advantage so that everybody is able to make money while we're waiting for our other big investments to play out. There's a lot of great opportunities in the market, but right now we have to trade the market that we are in, and the bear market is one of the hardest, most brutal markets to be in. We just came out of the best running bull market that we have had in the last 100 years. We have rarely had such an amazing bull market, and now we've switched into one of the worst bear markets. We've basically come out to the other side of it. We're coming into the other end of a super bubble. Y'all thought that .com and the Great Financial Crisis was bad. I'm worried that this is going to dwarf both of them. Let's see. What is this? What is this? What is this? Oh, interesting. Might have a little bit of news for all of y'all. AMC Theaters reaches first ever agreement with Netflix and will play Glass Onion, a Knives Out mystery in more than 200 U.S. AMC locations during the Thanksgiving holiday. Tickets go out on sale on Monday, October the 10th at amctheaters.com and the AMC mobile app. AMC Theaters is the largest theater exhibitor in the world. Today announced that the company's reached its first ever agreement with Netflix to play a Netflix movie theatrically from November 23rd to the 29th, and AMC moviegoers can enjoy Glass Onion, a Knives Out mystery at more than 200 locations throughout the United States. It will also play at select Odeon Cinema Group locations in the UK, Ireland, Italy, Germany, and Spain. The agreement with Netflix to play Glass Onion adds another major theatrical title to an already exciting slate of movies that will appeal to broad audiences during the Thanksgiving weekend. Tickets go on sale Monday, October 10th, and yada, yada, yada. Adam Aaron commented, "This announcement of our first ever agreement with Netflix is significant for AMC and for movie lovers around the world. As we've often said, we believe both the theatrical exhibitors and streamers can continue to coexist." That's awesome news. That's fantastic. See, this is what AMC has needed to do for a long time, is they needed to join forces with one of the main streaming outlets, because for the most part, like, AMC Theaters is a great novel experience and it's a cheap date. And as great as the whole Netflix and chill thing is, it's not the same as the real date experience that we have loved for the last, like 80 years.
Hey, TD, did that article mention anything about if it's exclusive and the time frame that it would be exclusive?
It doesn't seem to be exclusive. Like they said, it's playing at Odeon theaters, Odeon cinemas. So it's not exclusive, but
did it mention anything about if it's going to be in the theaters? Like, what's the question I'm trying to ask? If it's dedicated to theaters for a certain time frame before it goes to Netflix, like a week, a month, something like that.
The article doesn't seem to specify.
Okay. I was just wondering. I'm looking for like a precedence kind of thing. Like if they're gonna do this, what we would expect moving forward.
Yeah, I hear you. Wow, we've got two back-to-back harmonic patterns that are saying the opposite thing. You want to talk about a conflicting market, this is what it looks like. Apple is interesting. Well, we've got a cross down coming on Apple, so I'm thinking that it will probably test the bottom of this diamond. We will get this diamond pattern, or at the very least a head and shoulders pattern start to form out. Bond yields are starting to go up very quickly. The bonds on the 10-year, yields on the 10-year are crossing 3.82%. If we cross above 385, then market is going to shit the bed. The 2-year is also ripping. It's up over 4.23 again. We crossed over 4.2 this morning. So if you need an explanation why the market's tanking, the bond market is telling it to tank. That's what's going on. Let's also catch up with the HYG, the high yield corporate bonds. Yeah, it's calling for a move to the downside also. 1-hour candles are looking pretty brutal. Diamond top pattern on HYG, very similar to the SPY. This is such a reliable signal, guys. If you haven't been paying attention to this one, please add it to your watch list. HYG tells you what SPY is going to do. You don't have to do complicated technicals if you can just look at HYG, and HYG starts like printing this big fat red candle and starts taking a dive to the downside, and the SPY is just kind of sitting there going like, everything seems to be okay. The HYG is right. The HYG knows what's up. These bond traders really do know what's going on. And just like I said, SPY, we got rejected on that retest at the re-entry point of that diamond pattern. So remember I said that as soon as this hammer candle printed, what did I say? I said market's going to retest this level, and we're going to see if we re-enter the diamond. If we reject, we're going down. So now we've rejected. This is a rejection, clear rejection. Now we see how the market reacts. But this is an opportunity to get into some long put positions for the SPY, and this touches on the lesson that I was teaching everybody this past week. you can go long in SPXU. This is a leveraged ETF. This is way, 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 way cheaper than betting on SPY. If you go long in SPXU, this does the opposite of whatever SPY does. So here, I'll put the SPY. I'm going to zoom out to the daily, take away the moving averages so you can see it very clearly. Whatever SPY does, SPXU does the opposite, right? You see this? So now what do? We go in inverse. We inverse the scale for the SPY. And let's move the charts so that they match up. And overlay them so that they're almost a perfect match, right? And now I'm thinking that the SPY is going to touch 360. So 360, that price is 21.15 on the SPXU. So what do I want to do? I want to go long on SPXU to see the SPY retake this price. So I need to bet on something that's somewhere in the middle, somewhere close to the money. I want to bet on either October 14th or October 21st. SPXU calls for either 1950 or $20 strike price. Those are pretty close to the money. Those will be relatively cheap contracts. I'm estimating they're probably around like $80 or so. I'll go ahead and take a look at my my Fidelity just to see what those are being priced in at. Let's see, October 14th SPXU calls for 1950. They're currently trading at $1 per share, so that's a $100 contract. But if you were to do an in-the-money contract on the SPY, that would cost you what? $800 right now? If you go out to the $20, that brings your cost down to around $80. $80 for a single contract. For a $20 call on SPXU for next Friday. Again, this is not financial advice. I'm just naming options and strikes according to my strategy. This is how I trade the SPY. I use my leveraged ETFs. If you want to go out till October 21st, 1950 strike calls for SPXU are trading at $1.33 per share, or $133 per contract. $20 strike is trading for $100 and $114. 114, 115. It's kind of jumping around a little bit right now. But those are some good strikes that I think are pretty agreeable. And I'm anticipating that the SPY is going to reverse back to the downside, and that will cause SPXU to make another reversal move. So we've had these bear flags pretty consistently. And I do realize that I was saying the SPY was going to go up, but it turned around, and now I am changing my mind because I am looking for any signs that I'm wrong. This helps you to not be an emotional trader. Always look for signs that you're wrong, and if you realize that you are wrong, don't hesitate. Make the decision, but make sure it's a calculated, well thought out decision. Do your analysis, check your charts, and execute at the first sign that the market is going against you. Don't hesitate and hang on to losses. It does not help you as a trader. Let's go back to the SPY, and let's catch up with the chat. Coming up to the last 2 minutes of the market, so you guys have only a few minutes left to make your final decisions. This market is looking like it is going to turn around to the downside. We're getting a lot of patterns indicating that we are moving back down. Be warned that there is the possibility that we re-enter this diamond top and touch this resistance level. But if we do not break above 378, then we are going to come back down. That's just what the technicals are saying. This isn't crystal balls or any like magic. I'm not like using witchcraft to tell me the future. This is just technical charting. This can be wrong. It's not 100% accurate. So make sure that whatever you're risking is well within your risk management strategy. Two more confluences. We got bearish divergence called out here on the TMA RSI divergence indicator. And the PCO, this is essentially a price cloud oscillator with a MACD in it, and it's showing a take profit. We already passed a take profit way back here, and now the price is moving down, and we're getting ready to make another move or a swing to the downside. What? True Demon doesn't have crystal balls? Yes, as a matter of fact, I know it's hard to believe, but I do not have crystal balls. Let's see, what's HYG doing? All right, it's wicking down. We're getting these bull hammer candles, but it's wanting to break down. That's it. Ding, 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 ding. That's the bill. For those who are still betting on options, you have an additional 15 minutes to place any bets on the SPY or any other ETFs traded on the New York Stock Exchange and the NASDAQ. Yep, SPY's melting after hours. Okay. Hey, Wilson Gonzalez, thank you very much. I appreciate the respect. Anytime, Paul. Much appreciated. Partnership with a streaming business is huge. Probably. I'll think about it. Thanks for calling out Rumble. I will think about it. If it turns out that Rumble's a better platform than YouTube, then yes, I will make that transition. AMC made a mad wick on that news, but came right back down again. Yeah, I don't think that AMC is done going down just yet. We need to wait for their earnings and for there to be a clear change in the direction of their earnings. If we get anything like that, then that would be more encouraging to me. Glass Onion debuts globally on Netflix December 23rd. Oh, so this is theater exclusive. Thank you for the research, Ty. I appreciate that. That's good to know. Alexi asks if I'm still bullish on the overall market on the short term. No. No, I'm short term now. This whole pattern, this whole video, this whole stream has been about a turnaround. The market is changing its direction. It's moving back down. That is what this whole stream is about. So no, I have changed my mind. Short term, this market is not going up anymore. It's time for it to go back down. I want that to be very clear. Thoughts on T-Built? It's Tough Built Technologies, isn't it? I haven't looked at that in forever. Wasn't that a TBLT? That's an impressive. That's an impressive chart on the 5-minute. That's a nice pop. I'm not gonna lie. It looks really cool. Had this weird gap down and then gap up. This Bandon Island left here, and then you have a double bottom. It's a nice double bottom pattern. I'm not going to trade it personally. I haven't looked at this in so long, and I know it is a squeeze candidate, or so social media would say. But I'm not personally interested in in playing these right now, just because the risk is not in our favor. Okay. I'll be closely watching HYG to make its decision, but HYG's already made its bearish crossover on the MACD. We've got lower lows on the RSI. Volume is increasing as it's moving to the downside. A lot of confluences in our favor. This diamond pattern, plenty of indications that HYG is predicting a move to the downside in the SPY. And that would place us right back at support at 71. So we're just looking to trade the chop in the market in the short term. If seasonality starts taking effect and changing direction in the market again, I'll be sure to give everybody an update. I literally scrambled to go and to get this update out to everybody, just to give everyone a heads up of what was going on, that the market was changing its mind. So I'm sorry that I can't be there to like give people blow by blow updates. It's, you know, it's infeasible to do that, and nobody should really expect that from any YouTuber or anybody in social media to tell them what to trade. The important thing is to learn how to trade independently, just using what I'm trying to teach as a guide so that you can, you know, look at the right resources, so that you can learn how to trade on technical patterns, so you know what resources to rely on, looking for signals in the market, things like that. Let's see. VIX bull flagged and is wicking through the top. So that's another sign that the market's about ready to go and take off. We closed above 30 again. So that's a bad sign. Oh man, look at the RSI. That is a strong move. That is a strong move on the VIX. I would like to avoid using those comparisons for candles if we could avoid doing that, just because that's a little bit weird. But yes, I will take a look at DWAC. Okay, so DWAC still moving down in his channel. Haven't seen any change of direction. We have another cross on the MACD. The RSI is getting lower. The RSI is trading in a channel as well. It looks like it's heading lower, but it's going to be a slow move to the downside. Of course, I have no reason to be confident in DWAC at all. There's no reason at all to be confident in this company. The one thing that I see going against it is, oh, nope, we broke the low. Okay. So we were creating higher lows on the MACD, and we did create another higher low. If we get a cross down or a rejection on the MACD and DWAC starts heading back down, then this would be bad news for the stock. I'm also seeing the RSI is getting rejected by its moving average repeatedly, so that would definitely indicate continued downside. So expect a strong move from the market to send it back to the bottom of its channel soon. That might be a little bit extreme considering that channel is going through the floor, but maybe to $10 would be more reasonable. but you need that cross down on the MACD. If it continues to move up like this, then it might break out. I don't see that happening yet, but keep a close eye on it. Hey, Flintster. I'm so glad to hear that, homie. Good luck. Shout out to Flintster, who took the information that was given in the market and exited at precisely the right time. He exited at the very bottom of this diamond pattern and tripled down on his SPY put position. So good luck, homie. T-Bilt landed a huge contract in Germany. Oh, good for T-Bilt. I don't know how strong this move to the downside in the SPY will be over the long run, but the diamond top pattern indicates that we will return to 160. According to a measured move in the SPY, which again, this is how you measure a move on a diamond top pattern. You measure the largest move within the diamond from bottom to top, take that line, draw that line from the breakout point, which we broke out on this candle. And this is your take profit at around $366, $365.85. Be careful of rising lows as well. There is the potential that tomorrow we bounce off of this area or we wick through and then bounce up back through. There's a lot of chop going on right now. Market makers and institutions are trying to shake out participants pretty hard. This chop is really brutal for day traders. It hurts them a lot. I'm going to leave that diamond pattern there, actually. I'm going to leave that alone. So at the very least, we expect that diamond pattern to play down to this low, but it can return to previous lows as well. Sometimes you get diamond patterns that go up like this, consolidate, and then go right back down to where they were. We had this happen back in June. Right here. Had a big move up, big diamond pattern, and then straight back down and actually went through the floor and then touched the bottom of the market in June. And that was a pretty brutal downside move. If we end up hitting this take profit and then bouncing, then I think that we're going to be entering into a channel on the SPY for a little while. The move that I've kind of anticipated for October was that we would basically create a giant bear flag in the market, kind of like how we did here, but over a longer period of time. And the reason why I think that is I was taking lessons from the 2008 crash that took 2 years to complete. And there were several peaks, but on the very last rally that the market had, it kind of did this like zigzag pattern that made like a little hill, and then it just suddenly just dropped out. The market bottom fell out, and then it just kept going and going. So that is the kind of move that I've been trying to look for as a sign that the market was getting weaker and weaker on its strong moves to the upside. If that is what happens, then we are basically looking at a crash coming in the first quarter of 2023. We'll see, but for right now, we're just trading what's in front of us. General Disarray says, if a SPY hit 366 tomorrow, I'd be a happy boy. Let's take a look at the daily charts again. Okay, yeah, MACD is curling back around. We did get the cross, but the MACD is curling back around, and we had a rejection on the RSI. So we've had these rejections before. We had it here, and we had it here. We actually went through the RSI moving average and then rejected twice. And now this time, we touched it and are rejecting now. So this could be an even stronger move to the downside. I was kind of worried that the market was going to reverse very suddenly before, because we had printed this lower low, but it wasn't a very extreme low. It was just barely any lower, and then we bounced right away. So for me, I was thinking like, maybe this is the rally. Maybe I need to get out of these puts. So I did. And we went long on the market for this move. We captured this gap up, which was nice. But now the market's getting really indecisive again. So who knows? Like, this whole thing could just be another one of these big choppy months like we had in late June and July, right before the big rally. And I am still anticipating a seasonal rally for November, December. I just think it'll be a weak one, comparably, relative to the other market moves that we've had here. Like, this rally was 20% from peak to trough. If you go all the way to the bottom and to the top, this was a 20% move. This market bottom, we had a 11-12% move. I'm expecting this last rally to peter out around 8 to 12% at the most. But it looks like the market's not ready to rally just yet. We're going to have just a little bit more downside. So we'll see. Let me go ahead and take any questions from everybody. I'm going to stay on for 15 more minutes. You guys can ask me anything that you like, and I'll try to get all your questions answered. Reza Pishnaro. APRN is down 55 in just 3 days. I'll look at it, but I'm probably not going to like it if it's down 55%. Oh, yep. There's the rug. Homie, I'm really sorry. Yeah, this bearish divergence was your signal. This move on the daily was the signal that it was time to get out. You could have exited at 650. And you had a big bear flag right here, and it broke below and then gapped down. The MACD crossover would have shown an exit right here. And I'm sorry if this hurts. I know that I'm looking at this retrospectively, but this was a meme play. As soon as it broke its 200 daily moving average and couldn't recapture highs, that should have been the signal to get out. There were several opportunities to exit. I wasn't playing this one, and I don't want to sound like a dick or anything, but all I can say is that this is one of those things where you have to be objective. You have to look at the reality of what's going on. The SI being high doesn't matter, man. I've learned that better than anybody. SI is not everything. It doesn't matter that the short interest is high. When the short interest is high, that means there's a lot of people betting against the company, and they want to see it go down. There's a reason why they bet that way. I'm not trying to knock anybody's long-term holds, but like Blue Apron, I said several times that I didn't like the company's model, and that's why I stayed out of it. Even though it was ripping like this, it was nice, but this wasn't the market for it. This isn't the right time to be going long in basically anything. The market's very, very brutal right now. So I'm really sorry, but it was time to get out. And I'm not going to. Yeah, I'm sorry, man. I know it really hurts, and I know that this is advice given after the fact. But what you should do is try to learn from the experience. If you're not willing to hold this thing for the long term, or if you're not willing to see more pain in the market, because APRN is not looking strong right now, then be willing to cut your losses and look for better opportunities. And there will be a time for squeeze plays again. There will be, those days will come again. Squeezes happen. They happen in the market, not all the time, but they do happen. There will be times for that. But in this case, this one just doesn't have the strength, and it got smashed. We have to try to be objective and recognize when the trade has gone against us, cut our losses, and look for a better opportunity. And right now, the market is just, it's really brutal. So it's the time to be long in the market is gone. Now it's time to look for opportunities as the market's going down. Sure thing, homie. I hope that you'll come out of this on the other side as a better trader, because as long as you're learning from these experiences, it's not wasted. But it's important that you do learn and understand what went wrong so that you can come back stronger as a trader and make money going forward. If you're new to trading altogether, I strongly suggest joining Hell's Trading Floor and being a part of the community. It's $5 a month to become a denizen, and we will help show you how to trade the SPY and the other market tickers. Hey Jay, yeah, we did talk about BBIG. I covered it like in the first 15 or 20 minutes of the video if you want to go back. Stuart is asking about Biore. I will take a look at it. I know it's really brutal. And like I said, I mentioned this earlier on in the stream. This is one where I just don't care how low it goes. At the moment, it does look like it's going lower, though. Just being perfectly honest with you, it looks like it's heading lower, and that, for me, that's okay. I'm okay with that. I'm selling covered calls. I'm doing what I can to make money as it's going down. I'm waiting for Biore to receive its new level of support, and I'm going to just keep holding. This is one of those. This is a long investment for me where I do not care if it goes to nothing. Biore, I would stay. It's already gone so far down. Like there's no point in me selling. I'm not interested in selling. I like this company for what they're building, so I'm going to hold on to it indefinitely. That thesis has not changed. It's not going to change. As far as I know, the technicals and the financials are still good for Biore, so I'm going to hold on indefinitely. I had briefly looked into Sava in the past. They're announcing full phase 2 data in a month or so. Insiders have been buying massively, and looks like they have the most promising Alzheimer drug to date. Their drug has been 100% safe in over 200,000 doses given and has improved cognition in 63 of 100 patients at 12 months. Thanks, Jacob Ulkerhausen, for the information on Sava. I'll take a look at their chart. Oh yeah, I do see a reversal pattern here. It's a broken double bottom, but it played out anyway. And a very nice bull flag, actually, on the daily chart. Bull pennant, as a matter of fact. Even better. I do like it. Had a nice big pop of volume. Spent a few days consolidating and relaxing. Low volume move to the downside. And one big green candle. Pretty tall wick, but that's okay. Big volume, tall green candle. Nice engulfing candle. I do like it. The technicals look good. I would wait for another move to the upside, break out of the pennant, cross up on the MACD as it's going back up to the upside, and the RSI already looks good. A move like that would create increased strength, and I'd see it breaking this low. That would be a good trade for me. It's a little expensive though, so a bit difficult to get in on. I've got only 5 minutes left. I see they have a 37.6 million share float and a market cap of 1.7 billion. That is nice. That's actually really good. Their income has been dropping though, so that's not great. Their balance sheet is they're fairly stable on their liabilities. Their assets are depleting though as they're spending cash. Financing is basically nothing. There's no financing they're relying on. All of their cash flow is going out for operating expenses, so that's okay. Earnings are in pretty serious decline. I'll probably wait on this one, honestly. I like the idea of a company that's doing Alzheimer's medicine that is already proven to have positive efficacy, but I'm not keen to jump in too early. I would like to see this play out because there's another pattern that I do see forming here where you have a shoulder and a head forming. And if this drops down below the pennant and forms another shoulder, then you'll be seeing the price returning back to previous lows. It'll probably have to consolidate somewhere in this area at around $25. So if that happens, then maybe. That would be a good price for me. It's a little expensive for me right now. Let's see what else we got. No big updates there. GameStop is printing a bear pennant. This is definitely a bear pennant. Got a big impulse move on the daily chart and this symmetrical triangle pointing to the downside. So unless GameStop gets some strength and breaks back to the upside and crosses this 50-period daily moving average, I don't think that GameStop's going to do too well. I heard that their earnings were expected to be very good, though. They had a positive change in their earnings with a 15% surprise. They still posted negative earnings, so they're still losing money, but it is improving. That is positive. The balance sheet looks a little bit better. They're reducing liabilities. That's also nice. Cash flow, not really changing much. Operating expenses were massively reduced over quarter over quarter, though. So that is positive. Oh, I lost my mouse. Where'd my mouse go? There we go. Did anyone see the huge drop in Nvidia after hours a few minutes ago? Shout out to Flintster for this one. I did not see this. Interesting. I've been pretty bearish on Nvidia because of their last earnings report, and I don't anticipate it getting any better. Ooh, I have not been paying attention to Nvidia apparently, because there's a definite head and shoulders. One shoulder, here's the head, and if this gap down, yeah, this gap down to here. So next move is another shoulder, and if it breaks that neckline, Nvidia is going to head back down, and it may lead the market. This is also part of a large. This is also part of a large ascending wedge. Also, definitely an ascending wedge. I'm gonna be paying very close attention to this. Good call out, Flinster. Much appreciated, homie. This is trading down pretty severe. Ooh, wow. Oh, look at the wick on that. Just cut right through the 200 moving average on the 15-minute, and it's closing below, or threatening to. The 1 hour is not looking any better. I'll wait to see what Nvidia does next week, but so far this is looking pretty brutal. The ascending wedge on the after hours chart is looking even worse. Same drop in AMD. Something's going on with China and Taiwan. Something has to be going on with them. I'd be legitimately concerned. All right, I'm pretty much out of time. I'm going to catch up with chat and I'm going to go, okay? Reza, thank you for being a part of the Discord. Anytime, homie. Let me know who you are in the Discord. Feel free to just drop your name in the Discord chat. SpyVid mentioned a good way to generate liquidity between plays and shorts. Thanks, Jacob, again for the update on Sava. I will add Sava to my watch list. I'll keep an eye on that one. If I start getting back into looking for active squeeze plays, I'm going to pay attention to that one. I've got it on my watch list now. Thanks, Savvy Trader. Apparently, Flinster's crediting Savvy for the call out on the Nvidia drop. Did I see AMD? No, but everybody's telling me that it's getting slaughtered right now. Ooh, yeah. Yes, it is. It didn't even print that much of a bear flag. It was a really small bear flag on the daily chart, but man, it really, yeah. I wish I had played it because it's looking rough. It's breaking down after hours. It might gap back up and close inside of this wedge, but I'm assuming that this is kind of leading the market for tomorrow. Yeah. That's a yeah. That's a bear flag. That's a bear flag and an ascending wedge. Wow. All right. So something's going on in the market. New day low on Apple. Thanks, Boomer Assassins, for the call out. No one's talking about how regulators fine big banks for shorting the VIX. Retail and small funds lost billions. Now they have cheap puts. Now they're selling news Fed should do a 1.5 basis points hike. Puts on the VIX would be bullish, so that doesn't make sense. Shorting the VIX is a bullish bet. And I didn't hear anything about a 150 basis points hike. That would be pretty insane. I don't think the Fed's going to do 150 basis points. They won't even do a 100 basis points hike. They've so far refused to do anything that hawkish. Venomous in Discord. Okay. Oh, AMD announced its preliminary third quarter financial results. I'm assuming that that was not a good report. When the VIX is low, puts are cheap. Ah, I see. I understand now, Wilson. Thank you for clarifying. Okay. I am gonna go. I have to catch a meeting. So thank you guys for being a part of the stream. I really appreciate having you guys here. If you wouldn't mind leaving a like on your way out, and if you're not a subscriber to the channel, please subscribe so that you can get updates every time that we do a stream like this, or if we do some kind of new video to teach people how to trade technical patterns. We do that pretty frequently. And if you're not a member of our Discord, please consider joining at discord.gg/hellstradingfloor or through our subscription at hellstradingfloor.com. Thank you guys so much for watching. I look forward to seeing you in the next one. Have a hell of a time in the markets.